Morning, everyone. Welcome back to our morning cuppa at 8. I hope you had a very good weekend. Um, Today, we look at the Hang Seng Hong Kong market is going to resume today, and what we seeing right now, the Hong Kong market remains on the bullish bias, and on the upside, the resistance is 28,500 point, and on the downside, we set a stop loss at 25,000 point. Last Friday evening, right, we do see the HXC have a mild pullback, and as such, this morning. We think that Hong Kong market will have a bit of profit taking, but nevertheless, overall market sentiment remains risk on in the Hong Kong market right now. And as for the trading stocks, firstly, we'll be looking at the Baidu 9888. Baidu also lists in the US market. So this Baidu is the one that in the Hong Kong market, stock code 9888, and it have a break past the Hong Kong dollar 135. So next resistance is 145 and followed by 160. Downside support is 125. Now, secondly, we have the Aluminium Corp of China. So this company is in the business of aluminium, stock code 2600. Last month, we do have a report on the Aluminium Corp China as well. And today, what we do see is that the Aluminium Corp China have a break past 7 Hong Kong dollar 80 cents. Next level will be 8 Hong Kong dollar 80 cents and followed by the 10 Hong Kong dollar mark. Downside support is 720. Right. Secondly, we have the Shanghai Futan Microelectronics 1385. Now, this company is in the same category with the SMIC 981 and also Horng Semiconductor. What we do see is that the semiconductor related stocks in China right now have a very strong sentiment. So uh, the 1385 have a break past resistance of 46.50 cents. Next level will be 50 and followed by 55. Downside support is 43. And then on we have Ganfeng Lithium 1772. Look at the chart. The stock has been undergoing corrections for a very long time, and right now, yeah, showing a bullish bias after it break past the 45 Hong Kong dollar. So the next resistance will be 50 and followed by 55, and downside support is a 40 Hong Kong dollar. So at the Hong Kong trading idea this morning, we have Baidu 9888, Aluminium Corp China 2600, Shanghai Futan 1385, and Ganfeng Lithium. Right, and at the Friday sessions, we do see that the Europe market continue to move higher high. Meanwhile, S&P 500 is trading at a record high right now. So you can see that the Europe as well as the US market are both on the risk on sentiment, right? And so if you're following our technical report, right, last week, we do have a report on the vehicle related companies. Firstly, look at the Ford, right? They are break past the resistance of 12, right? Right now, they have been breaking past 1250, and next level will be 13 US dollar. On downside, support will be the 11.45 US dollar. Secondly, we have the Biogen, which stock code BIIB. Now, recently the company successfully rolled out a drug that related to the eczema, right? And we do see that on the technical, right, the stock have break past the 150, right? Heading towards 160 and towards the 180. Downside is 140. So looking at the price volume profile, do see that the very strong support is at 140. So since it's break past the 140, overall technical setup become bullish on Biogen, BIIB, which they are under the eczema drug. And we still keep a bullish bias on the FKRI despite Friday there was a mild profit taking. So we set our stop loss unchanged at 1535. FCPO, we keep a bearish bias unchanged and stop loss at 4006. And for Malaysia market, firstly, we'll be looking at CIMB Group, break past the resistance of 7 ringgit 50 cents. Upside resistance is 8 ringgit, followed by 8 ringgit 30 cents. Downside support is 7 ringgit and 20 cents. Secondly, we have Crest Group, company in the um, that distributing the imaging equipment. The stock have break past 27 cents and half right now, heading towards 30 cents and followed by 32 cents. Downside support is 25 cents. Then on we have the QUS group that break past 41 cents and half right now, also traveling towards 44 cents followed by 47 cents. Downside support is 39 cents. Finally, lastly, we have the MBSB, which are break past 75 cents and half, eyeing to test 77 cents and half, followed by 80 cents. Downside support is 73 cents and half. So we have a few breakout stock this morning. Firstly, banks, CIMB Group. Then on secondly, the E&E Counter, Crest Group, QES Group. Then on another bank stock, which is a Shara Compliance, MBSB Bank. So I'll stop here and pass on to Yong on the weekly economic updates. Thank you.
Thanks, Joseph. Thanks. We'll share our slide first. Let me. So, morning, everyone. Thanks for joining the call. So currently, we are still seeing that the risk sentiment index continue to outperform. You can see that it's showing a brisk on sentiment from here. So, in fact, that after the shutdown news from US, the US equity has closed higher, as really you can see from the S&P 500 from here. So, previous concern over the rally exhaustion, as I mentioned last week, is not materialized. A bit the technical cues still suggest a short-term rally cap that could be observed into the year end. So, if we look through from here, let's see from figure 30, slide 13, that you can see that US shutdown still represent the buy signal. So remains like how long the US government shutdown will be. So you can see from past 5 shutdown from US, the average duration is around 16 days, although the longest was 35 days in 2020, 2018 and 2019. So under the first administrations of Trump, we think that the market impact is usually muted. You can see from the shutdown impact from here, there isn't any major impact, and also equity is show that this is temporary. So more importantly, we think that this will already rebound after the shutdown, and especially if the resolution is more credible and orderly. So aside from that, we also published a Pathfinder report of our fourth quarter last week. So we see that despite growth in the US and China, global markets have shown surprising resiliency. You can see from our figure here. So you can see most of the equities are showing a very strong resilience. So despite the underlying weakness suggests that this optimism could be vulnerable. So we forecast that GDP for ASEAN 6 to moderate to 4.4% before recovering to 4.6. So our supporting factor including domestic demand, favorable policies, and improving certain trades in certain trade sectors. So we are releasing the budget this Friday at 10th of October. So in our view, they'll likely focusing on 5 prongs, including fiscal stabilities, economic stimulus and infrastructure development. Third, social welfare and inclusivity, and the strengthening of business investment climate, and lastly on ASG. So other than that, we can see from China. So we can see that China PMI has increased to 49.8 in September, up from the August 49.4. So the manufacturing PMI is still below 50, which suggests that the expansion period has not even breached, while non-manufacturing PMI has declined to 50 at the borderline against a prior print of 50.3. So this suggests that both suggest that Chinese continue to slow down and more policy required to avoid a steeper pullback. That's all from me. Let's pass on to the next speaker. Thanks.
Okay, thanks, Yong. Let's move on to Sime Darby Property. We recently brought the senior management team, Group MD, Datuk Sri Asman Kan Township COO, Apollo Loong, and the Operations Support COO, Melissa Tan, and the IR team for a half-day NDR meeting 20 fund managers in town. So many were upbeat with management's firm commitment to build a solid industrial property asset portfolio over the next 2 to 3 years, as this is important to realize Sime Prop's vision to transform into a real estate company, sustaining its long-term strategy, growth strategy, and also providing monetization opportunities. Acknowledging the growth prospects of Iskandar Malaysia and also MBV 2.0, Sime Prop is actively looking for new land to enhance its land bank exposure, which is currently very much concentrated along Selangor's western corridor. As SD Guthrie is a major landowner, we do not rule out the possibility that Sime Prop may JV with the former for industrial and township developments in these new areas. This could be a re-rating catalyst. In the pipeline, Sime Prop will activate 3 industrial projects: Vision Business Park at MBB 2.0, which was already launched a quarter ago, Banta Bukit Raja Business Park, which was previously known as BBR 4, and Elmina North / Lagong. These projects are set to drive Sime Prop's industrial property sales from 2026 onwards. Interest has been strong despite the unfriendly trade policies from the US. Apart from the usual MNCs coming from the European region, management also recently see more demand from Chinese manufacturers to set up plants and at its industrial parks with lease arrangements and buyback options. As for BBR Business Park, Sime Prop will spend more arrangements and buyback options. Sime Prop will spend more investment in flood mitigation, infrastructure, and incorporate some ESG features. Although pricing for land parcels and factories will be at a slight premium from BBR3, Sime Prop is very confident that good infra will attract serious end users given its past experience. Okay, on the investment asset side, while the bread and butter is providing Sime Prop, bread and butter projects are providing Sime Prop 3.5 to 3.6 billion in property sales every year. Management's plan to grow its investment is moving in a right direction. The company currently has asset under management worth 2.9 billion, comprising retail, commercial office, industrial, and a little bit of healthcare, just 1%, mainly retail 50%. So based on our estimate, we think the AUM value could accelerate very quickly, potentially hitting 4.5 to 5 billion by end 2026 and probably 7 to 8 billion by 2027, given the upcoming completion of investment properties in the pipeline. So this includes KLGCC Mall in 4Q this year, Data Center 1 in second half next year, Metro Hub 4 in third quarter next year, and also Data Center 2 in FY27. So apart from these assets that are currently under construction, construction contract for DC2 will soon to be awarded. Sime Prop's plan to boost its industrial property portfolio include holding back some industrial property and land sales, as this will be developed into recurring income at generating assets. Second is to potentially acquire more industrial properties in Malaysia and even in overseas markets. Supply of built to suit to lease industrial properties from all its industrial park projects. So we believe one of the important competitive edge that Sime Prop has over its peers is its prominent presence in the industrial development front in Malaysia, with 2,500 acres of remaining industrial land and 14 billion remaining industrial GDP. So its presence, experience, and industry network in this segment started more than a decade ago. So, of course, acknowledging its balance sheet limitation, management could potentially set up fund management platform under its strategy for investment and asset management that Sime Prop can participate, so that Sime Prop can participate and undertake more sizable investments in future property assets. So if this materializes within the amount of assets that Sime Prop can undertake or can own, could be very substantial over the longer run. In our opinion, we think asset monetization via a REIT listing could also be an alternative funding strategy under the IAM, which is a more common fundraising avenue. So this could act as a share price catalyst as well. So overall, we maintain our buy rating and target price is unchanged at 2 ringgit and 33 cents. Let me stop here and I pass to the next speaker. Thank you.
Let me move on to Solarvest. So this is another project win where they signed a 30 years PPA with SESCO to operate and develop a 100 megawatt AC of large scale solar photovoltaic plant in Muka, Sarawak. Now, this marks another first assets in Borneo and adds to its growing asset portfolio with recurring income, reinforcing its position as a key solar energy player. Now, Solarvest will hold 60% in this Muka solar power plant, where the remaining 40% are held by Press Metal. In terms of the earnings estimates, if you assume an IRR of 7 to 8% with a total capex of 380 million and a debt equity ratio of 4 times, the project could generate an average net profit about 6 to 7 million per annum, which is about 8 to 9% of FY26 earnings. However, the project will only commissions on November of 2027, in which the full contribution will only come in FY29 for Solarvest, which is ending year of March. Now, in terms of the new assets, I think these assets adds to its large scale solar effective ownership of a 204 megawatt power, comprising of LSS 5 plus, LSS 5 Brunei's renewable energy projects, several CGPP projects, as well as its fully commissioned LSS 4 Korean project in Perak. Now, these projects will anchor Solarvest's long-term earnings visibility as well as a recurring income growth. Now, we expect the group is well positioned to capitalize and more projects in the pipeline, as well as reinforce its long-term earnings visibilities supported by various policy tailwinds, such as Malaysia's NETR, which encourage stronger private sector's participations in the RE space. Now, we build in the contributions of this new power plant, as well as the gearing expectations into our estimates. Our SOP derived target price is now rises to 3.58 ringgit. It was 3.26 ringgit previously, based on 60% stakes in this a new asset with a TCF base and a 4.7% WACC assumptions. Target price inclusive of 8% ESG premium due to its 3.4 ESG score above the country median of 3 times. We maintain buy on the stocks as we think they will continue to grow in the next few years, underpinned by the robust projects flows, as well as a record high order book in the EPCC contracts itself. 3.58 ringgit is the new target price and maintain buy. I think that's all from us today. Thank you for joining us. We should see you tomorrow.